Now, I'm going to kick off with Michael. Michael Milling, you've been very active on the chat, answering many, many people's questions. I would like you to just summarize what you've been answering for those who haven't been reading everything on the chat, and elaborate a little bit more, for instance, what you think about the discussion between creating a value in space versus for Earth. Michael. You are live, Michael. Hopefully we can hear you as well. Hopefully you can hear me. I'm not sure. Michael, can you hear me?
Yes, I'm sorry. I was listening to Senator Nelson's hearing in the U.S. for the new NASA administrator.
Oh, I'm sorry to take over from the Senator, but
this is much more enjoyable.
Parallel hearing. Did you hear the question?
No, I'm sorry, I did not.
Well, okay, you can go back to the center after this. I can see that you're answering a lot of the questions on the chat. I would like you to summarize roughly what you've been answering, and also just a little bit about what you think about creating a value in space versus for Earth.
Yeah, so a couple of points that I was getting to in the chat. The first is, if you are attempting to build a company whose customers are in a marketplace that doesn't really exist yet. So that's the space resources for use in space. It is very difficult because at that point, you have to not only create your own business, you also have to create the market yourself. And so there are strategies that allow you to sneak up on that problem. So the two things that both Mana and Offworld are doing, creating ways of both a space and a terrestrial market that allows you to build up 90% of what you need to be able to go to do the same thing in space, is a great way to reduce costs, create a sustainable company that can attract capital. And then when that market becomes much more mature, it's much easier for your company to be able to attack that emerging market. And that's one of the ways that I would encourage anyone that's looking in space resources, is how you can apply what you're doing to terrestrial resource extraction as a way to stay alive and attract capital until the space resources market becomes much more coherent. The problem that we have in a lot of these space resources discussions is the issue of space resources for use in space versus space resources for use on Earth. In order for space resources for use on Earth to be viable, the space resource extraction business in space has to at least match the marginal costs associated with extracting resources on Earth. Because if you can't, then you are inherently uncompetitive. And no one will buy your resources because you are inherently more expensive than anything they could buy terrestrially. So the challenge is, how do you get to that point? And the only way that we really see that is for doing space resources for use in space first. Because that's the only place that those resources make sense, because the Earth's gravity well is just too steep. And so when, at least from Starbridge's standpoint, when we do this analysis, we really do think that the only market that really does justify all of this is people living in space in large numbers that need that infrastructure and are willing to pay for that infrastructure. And when you get to that point, very quickly you discover that it's much more cost effective to bring oxygen from the moon down to or up to your space settlement than it is to bring it up from the surface of the Earth. That's when some of those business cases start to close. This is basically what Elon discovered, because his goal for SpaceX is the settlement of Mars. And once you do that, then a lot of the other business models that we're talking about here start to finally close. And that's really the challenge I see for a lot of the businesses in this sector, is the ultimate customer doesn't quite exist yet. And in certain fora, we are reluctant to call out what that ultimate market is because for some reason, the idea of human space settlement seems to be unable to be spoken out loud. Right now, the only country that is willing to say that out loud is the UAE. They have a national goal to create a city on Mars, a uniquely UAE city on Mars, and that is their national goal. The United States hasn't said this. ESA and the European Union haven't said this. So in our opinion, that's the ultimate goal. Elon has said this, and that's one of the reasons why he's able to get the interest, both commercially for what he's building in the infrastructure, and from customers, i.e. people that want to follow him and go where he wants to go. So that market does exist. And so those are some of the comments we were discussing on the chat. But also there also, as Bruce mentioned and others have mentioned, there are other financial tools out here for dealing with things that don't fit venture capital. But there is a government role in some of this that does look like what development banks do for financing very long-term businesses, pretty much anything that goes beyond 10 years.
Thank you very much. Although the UAE and Elon Musk have a certain amount of private capital that many other governments and personalities don't have to hand. Anyhow, good examples nonetheless. Moving on, Bruce, hopefully you could hear all of that.
Yeah, I did.
Bruce Cahan, hello, hello. And I have a question here which is really coming in from the ESA team behind the scenes, the chairs of this session, in fact. They say your January 2021 report focuses on the economic competition for and in space and offers a number of finance mechanisms that space can use. Can you describe the Space Commodities Exchange and government-guaranteed space bonds?
So I have 2 minutes, is that right?
Concise answers would be good.
So yeah, the Space Commodities Exchange is something that, as Jim knows, I proposed beginning back in 2016 and have pursued ever since. And I think it helps to solve many of the pain points that Michael particularly and Jim referenced, which is who is my customer, where, for what, when, and what are the nested value chains that I am dependent on, a demand for, and supporting. Those imponderables are hard for investors and governments to know and to get right, and certainly Luxembourg has a history of getting that right and wrong. And so what this does is create a massive transparency for the space economy, in addition to what Carissa does of tracking some of the sectors that are growing by saying, okay, I see commitments to buy, whether it's the lunar water or the regolith or the oxygen, you know, I see that that's a commitment in a contract for a particular time frame. And now I can build a company to support the launch and the other activities that are dependencies and enablers of those commodities. The definition of a commodity is the thing you use, not the technology you built to get there to use it. And that's a big distinction, and you know, I've shown you the January report because I think you'll find more detail there. The space bonds was something I proposed in May at the State of the Industrial Base conference that analogized to all kinds of infrastructure that certainly in the US and European settings in the 1800s, in the industrial age, 1900s, were used by government to take on the responsibility of supporting the growth of infrastructures that would build an economy that the government ultimately, frankly, would tax and expand its industrial base from. So if we look at, and the report in January inventoried health as infrastructure, or mining as infrastructure, or certainly transportation, and many other infrastructures that we rely on. And I took the U.S. as an analogy, as the setting. You see government for the last 100 years developing guaranteed bond programs or subsidy programs or other programs that say this is critical infrastructure. And what motivated me and Mir to write the report was we were hearing people hand-waving at space being essential for other critical infrastructures. We thought it made sense to call out space as critical infrastructure, which gives it a special designation in the federal attention level and protection level. And then to aim at a North Star 2060 vision, as Michael was just saying with Elon, that there needs to be a consistency of U.S. policy, and I think any governmental policy, as if you were building critical infrastructure. So look at 2060 and what you're going to want to work backwards from there, saying that you must have built in the 2020s and 2030s. And if you could do that as a government, because you are the ultimate and primary customer for space, you would probably be more economic and predictable in your decisions. And then investors like Starbridge and the others can key off of your predictability and your commitment to that infrastructure to say, okay, what are the companies that would need and logically follow from building those infrastructures? I'll just take one more minute, and there's some other papers that we're working on specifically readiness levels, because as you saw in my presentation, there needs to be a commoditization readiness level for me to be able to have a definition of what will trade as a commodity before the technology is actually fully baked. And we're looking backward in history for other technologies that had to develop their readiness levels. And some entrepreneurs that succeeded and failed along the lines of some of the other panelists saying, okay, did I prioritize certain euphemisms and certain visions, as Jim said, over the practicalities of it, as Nick was saying, and the others. So you can see a certain conceit in historically the inventors who would not, who thought that they could take credit, for instance, for the IP of a flying machine. Didn't work exactly the way the Wright brothers thought. And so we see the need for many transparencies of where the market is developing, predictabilities of where the market's going to go, that are needed for the capital to flow consistently beyond venture capital, to replace that and grow on that venture capital. So I hope that made sense to everybody. It's still early here.
There's quite a few people still here, actually, even in the room and online, and there is so much to think about in what everybody said. A lot of people want to re-listen to everything and to find out more information and get hold of any slides that have been used as well. You mentioned a few things there. Firstly, I want to put to Carissa Christensen and Pierre Festel at the same time a couple of questions, but they're linked really, and to combine the questions really. What do you expect from a space resources company to convince you to invest in it? So I don't know if we can get both of you up at the same time, but Carissa, yes, you're there first. You go ahead.
I expect of a space resources company to persuade me to invest in it what I expect of any company to persuade me to invest in it. And that is a business plan that speaks to a realistic customer set, a thesis that drives potential growth in a credible way. And I'm frankly going to be much less concerned about technology barriers. Technology barriers are typically not why space companies fail. and much more interested in the business case factors we've been talking about. And one of the points that I want to make is government customers are not bad customers. Government customers are often excellent customers, predictable, long-term. The importance, I think, in the discussion here is to be realistic about who the customer is, what the growth potential is, and whether that customer is going to be government for the foreseeable future or where there is a genuine commercial customer available. So I'll turn the podium over to Pierre.
Thank you, Carissa. Pierre.
Yeah, thank you, Carissa. Yeah, I would say, I would echo, Carissa's comments around, I think we're always looking for the same things, regardless of what the company ends up going after or what market that company is addressing. We need something. We need a team that can articulate a vision and come across and show that they have the ability to go and execute that vision. I know it's pretty broad, but ultimately that's what we're in the business of backing teams, and that's by far the main criteria on which we base our investment decision.
Thank you, Pierre and Carissa. Now, switching tack a little bit, hopefully Frank is still with us. Frank Salzgeber, are you still there from ESA?
Yes, I'm still there, waiting
Wonderful.
for the final question.
Well, not the final question, actually, but sorry. But one of the questions that came in through the chat, early on in the chat, actually, and it's about intellectual property, which Bruce touched upon as well. The question is really, intellectual property is the main asset of startups, but universities and some governments regularly pressure startup companies to give up IP to be supported during the early stages. Is this the case with ESA and European programs?
So first, I love this question because I'm always waiting for that. This is one of the reasons why the industry and the startups love ESA, because our business model is to help and to support the industry, so to help that they fly. That means the normal terms is when you get a procurement contract of ESA, the IP stays with you. There only are very, very rare cases where we have some rights, but normally in the majority, we leave the IT with industry because we believe that's the best place. We have a clause, however, in our contracts, which is a positive one, that ESA remains the right to get a license. We don't say for free. Yeah, but that means also when you have a great rocket, come on, we paid hard of maybe a certain percentage of the R&D. We also like to become a customer. So that is really what is behind. So this is also the reason why the industry loves to work with us, because we are very industry SME related and support them and leave the IPRs with them. Also overall, we have to say, and I was doing tech transfer for over a decade, a lot of people think, we do exploration to getting a lot of patents out of it. That's wrong. We do exploration because we are explorer. A society stops exploring, stops progressing. This is the reason why we do exploration. If we get great technology out of it, that's perfect. That is a recycling of technology. But don't take that as the motivation to make money out of it. That's the wrong motivation. And I think Bruce knows that. Even the Stanford IP office says that we agree. Sometimes we do not know what we protect because we do not know if we make money out of it. So, but this is something where we recycle our previous ideas, which is also of value.
That's great news. Lovely thing there. Thank you so much for that wonderfully positive response. Jost, again, from the audience, a question here, jumping tack a little bit. He says, I see the benefit of the two birds, one stone approach, but doesn't it leave the risk that your technology is not completely suited or adapted for the Earth-based application? In this specific case for Mana Electric, how do you assess the risk of other and potentially cheaper technologies becoming available to produce energy for Earth applications?
Yeah, so first of all, our business model is to produce solar panels that are cheaper than China. So that's a big challenge in itself, as you can imagine. But it's made possible by the fact that 80 to 90% of the cost of a solar panel is just in materials and electricity. So when you are using a very cheap feedstock material, you can make big improvements on the cost aspect, let's say, just to start. Yeah, it's always a risk you have, but I think proper trade-offs is what you always should do. And again, what I also said in my presentation, it's very important that you are self-critical. Don't become too subjective and say, but this technology, it makes so much sense for space, so we should use it for Earth. No, you have to look at it critically and say, if the technology that makes sense for Earth doesn't make sense for space, and the technology for space doesn't make sense for Earth, then you develop those technologies separately. And on average, we're doing about a 50-50, right? 50% of the technologies make sense in both cases. 50% of the technologies only make sense for Earth, for example. And I would say the big benefit of what we did, we set out from the start the requirement that we have to be able to operate this system remotely from Luxembourg when it's in the middle of the desert. So that means that you cannot have these huge supply chains that you're used to. And I said yesterday as well on a panel, we're addicted to supply chains, and that makes sense for certain business cases, but actually, if you can eliminate those supply chains and you go to the very basic fundamentals, you can have a very good business case. And that's what we did. Because if you take away the luxury of being able to get your solar cells from supplier A and your silver paste from another supplier, you know, if you take away that luxury and you are forced to try and make a product with just what you have available on site, you have the potential to reduce those costs significantly, because that's, you know, think of a solar panel, like 15% to 20% of the cost of the solar panel is just the silver paste that goes onto the solar cells to interconnect those solar cells. We don't have a silver paste in the desert. We have to find another way to do that interconnecting, and that's what we have done, and that means just in that you save that 20% cost.
Thank you, Joost. Now, a question to Nick Appleyard. It's coming in from Roberto Cossu and Susana Soto, the ESA chairs of this session. Further than providing an infrastructure, and well, first of all, is Nick there?
Yes, I'm here.
Super. Here's your question, Nick. Further than providing an infrastructure and related services to space resources companies, would the Moonlight Initiative facilitate companies to attract and convince investors?
Yeah, and certainly this is something that ESA tries to do for any of the companies that we deal with, is to assist them in breaking their dependence on the public funding and finding venture capital investment or whatever other debt and equity investment they need in order to take things to scale in the market. We don't want companies that work with us to be endlessly dependent on our subsidy. So yes, we do act to facilitate that kind of relationship with investors. We run a thing called Investor Forum, where many of the venture capital investors and other investors are invited to hear pitches from some companies that we have confidence in and we think are good investment propositions. I think one of the things around the subject we're talking about today is we're going to need, I think, to demystify it a little bit. And this is true across space investments generally, that large parts of the investment community think that the whole thing is a bit frightening, that the technology risks are high, and they don't really understand how the businesses work, and so they're reluctant to invest. And this is particularly true on the debt side, but also on the risk capital side. It actually serves us quite well to say, actually, don't worry about this. The technology has got a 60-year heritage and is pretty stable, and those technology risks are pretty well quantified and managed. Look at the business risks and analyze the companies that come to you as if they were straightforward terrestrial businesses. You know what? A rocket company is a logistics business, and the fact that it's using rockets instead of trucks doesn't affect the way you analyze the way its business case functions. A telecom company is a telecom company, a mining company is a mining company, and you know how to invest in these things. So if you strip away the mystique of space a little bit and just look at the business plan as a conventional business plan, then you understand the investability. Now, there are some things around what we're talking about which are in a different balance to what they're used to. Some of the return on investment timelines are longer. Some of the risks are in a different ratio to conventional quantification. And I think we heard it was from Michael earlier talking about how you deprecate and defray the costs over a long investment period. But you know what? It's all calculable. It's all very much doable from an investment point of view. So I think part of our role is to reassure the investors that the companies who are coming forward with these propositions are perfectly straightforward businesses, and they can treat them in that way. As long as they understand how those businesses work. And this comes back to the point which has been repeated throughout this afternoon, which is we have to clearly identify what the customer's proposition is going to be and where the revenues are going to come into each business. And once you can do that, then the businesses become investable or they become bankable. So yes, ESA will play our role and we'll support that.
Thank you. Thank you so much. Almost a final question, which I'm going to put to Jim and Julien at the same time. Jim, concise answers, please. Which recommendation would you make to investors and stakeholders like ESRIC or ESA to support space resources companies? So either of you can jump in first, Julien or Jim.
Well, maybe I'll go first. Is that working?
Yes.
Yeah. Well, I think ESRIC could have a role to play, for example, like NASA did last year. I mentioned the regulated collection contract. This was a very significant, I think, first step by NASA. You know, the commercial amount was very little. They allocated $20K to this. But this will again be the first commercial transaction of a resource, you know, coming from outside the Earth. It's going to test the space resource law in Luxembourg, in Japan, and in the US. So it's very significant for you know, ensuring the next step of the space resources business. And as I explained on my last slide, you know, there's other things that can be done there in other pieces of the value chain. You can buy the actual resource, the physical resource, but you can buy data about resources. There's other things where public agencies and research centers could position themselves as key anchors to you know, fill in gaps in the value chain or demonstrate other aspects of the business.
Thank you, Julien. Jim, could you hear the question?
Yes. Yeah, I got that.
Over to you.
Yeah. So, look, I think there's excellent organization going on in terms of supportive frameworks, incentive grants, and a lot of great activity. I think we need to find a way to bridge the risk profiles of national-based institutions that have, let's say, obligations to public capital, and then the entrepreneurial field at the edge of an expanding market frontier, attempting to leap impossible chasms. And right now you have a disparity, I think, a little bit to what Julien was saying in terms of size of capital. We need to bring those risk profiles together.
Oh, that was concise.
Surprise.
I'm shocked.
Can I use this time?
Take my breath away almost. Well, I mean,
one interesting point to make, again, I want to point out the fact is it doesn't have to be a huge amount of money. I mean, again, NASA, they're spending, I think, $15K on the whole thing for 4 companies, 4 contracts. Very little compared to, you know, I don't know the budget of ESRIC, but very little for any public agency. So it doesn't have to be a lot of money. Just a little bit to, you know, create a spark and let the private industry then do the rest.
If I can add to it, the same for us as well. If an ESA or an LSA or a NASA comes along and say, look, if you can provide 500 watts of solar panels on the moon to us, we'd love it. And it can be a symbolic amount indeed, but just to have that first start. And I think also for the investors in the panel, that gives them a little bit of confidence, like, okay, at least the first steps are being taken. It will still take some time before it's real, but once iSpace really can sell some regolith, for example, to NASA, we are able to provide some power to NASA or LSA or to iSpace. That's when you start getting the inklings of this market starting. And in the end, yeah, it's in the benefit of the market without a huge investment. So I agree.
I've got one more point coming in here on the chat. Brian Joel, I'm not sure if I've pronounced your name correct. He says, great discussion, but I think the industry has a short-term problem. Does the panel believe there is a current supply chain infrastructure to sustain the current growth? As the broader aerospace market recovers, I do not see there is a supply chain that can support the short-term growth. Any panelists got an opinion on that?
I would just say that may be true now, but I think there's going to be a critical change if reusable low-cost launch really becomes a reality this decade. That's going to change the economics of a whole bunch of assumptions.
Mm-hmm.
Thank you, Jim. Gosh, you're being very good on conciseness right now. Has anybody got a final? Yes.
Yes, at least in my case, one of the things I think is going to be a trend is in emerging markets, supply chains should not be complicated and have large numbers of players in them because they don't justify themselves. You end up stacking profit margins on top of profit margins until the point where you have something that no one will buy. So that's why I think that in the early stages of this rollout, you're not going to have a multiplayer supply chain. You're going to have very vertically integrated supply chains within one company. This is what Elon is kind of demonstrating, is you make this sustainable by consolidating things and focusing the entire supply chain within one organization. And then when you get later on and start trying to optimize your supply chains, that's when you get the differentiation around particular skill sets. And I think that's kind of the trend we're going to see probably over the next 10, 20 years is space resource extraction and use is going to be very vertically integrated around an application as opposed to being very diversified infrastructure. You see diversified infrastructure in mature industries, not emerging industries.
Thank you. And Jost has a point to make.
Yeah, I think what you see in the space industry is that usually there's one rising star like a SpaceX, and when they are able to accomplish something that they do, like SpaceX landing their rockets, you see an explosion of launch companies, for example, now, to the point that it's unfeasible that there will be that many launch companies that will be successful. But that's actually a good thing, because in the end you have 5, 10 successful commercial launch companies who then have that supply chain sorted. And I think you'll see the exact same thing in the space industry. Maybe Mana will be the first on energy, maybe iSpace the first on landers. And on landers, we're already seeing this happening, that there's more and more lander companies coming, perhaps also to a point where it might not be sustainable. But you'll see the same for every part of the supply chain. And there needs to always be one or two or a couple that kickstart that, and only when one is really successful do you see everyone jump in and follow along with the rest. So it's the first mover.
We have, I'm being told by Roberto, we still have a lot of people connected, so you've all kept your energy really, really high. Just throwing the floor open for any of our panelists to give us a final thought, if you wish to. Has anybody got a final thought they would like to add?
So I just wanted to build on some of the discussion, and that is to say that I think it is up to those who are leading the building of the space economy to help others understand the risks as themselves being commodities. And this obviously is taken into account in the derivatives portion of the space commodities exchange that we're building. Launch can happen or not, just like currencies can go up or down. Financial investors can understand binary risks. How do we position and, frankly, outsource some of the risks that otherwise would have to be covered by equity and raising equity? How do we position some of the risks of the space economy to be financial risks that can be externalized? And even the demand questions are financial risks that can be externalized. So I just, there is some financial engineering, as I've been calling it, that needs to accompany all of this amazing science fiction kind of technology building. But to do that, we really do need in finance the expertise of folks who are building and about to use and be customers for this great apparatus.
That's a wonderful point, and as you talk about the financial engineering, as you call it, it makes me think, when you mention the word risks, we also need to think about insurances and a whole insurance company that could build around this as well. Any other final thoughts from our panelists?
You know, it's kind of interesting. The internet era, if you like, of connectivity, smartphones, web pages, took about 30 years to get to the extraordinary backbone of our global economy that it is today. That was a nascent or a very early stage capability that hit a completely viable market, a very large addressable market. If we take a 30-year approach or outlook today from 2020 to 2050, I think by bridging and building upon the orbital services that we will have an even bigger expansion over the next 30 years in the cislunar and slightly beyond, but definitely the cislunar economy in terms of how many trillions of dollars annually it's adding to the throughput of our global economy. So the game may be a little slow to kick off over the next 3 to 5 years, but over the next 10 to 15, 10 to 20 years, the transition points are going to be just huge. So all you young entrepreneurs out there right now, stick with it, position yourselves, get in the game, get skilled, get some war wounds, have some failures, and keep going. It's a long game, but there's everything to play for.
Thank you so much, Jim. They're wonderfully warming words there for young entrepreneurs or people who want to become entrepreneurs to end today. I'm going to draw a line there because we are a little bit over time, and I'm sure many of you have families to return to or dinners to eat in Luxembourg time and various other things to go to bed if you're still with us in Australia. We still have a lot of people online. As always, you can continue the chat online, and tomorrow please join us either in person, but most especially online. There's so many of you online for our final day of Space Resources Week here in Luxembourg. Thank you in person to Jost and Julien also. And as always, thank you for being present here, for being present online, for your continued discussions, and always to the organizational and the tech team. Thank you very much.